This is your LMAX exchange technical update for Monday, May 8th, 2017. Euro dollar. So the euro continues to extend its run of 2017 highs, with the market most recently breaking up above key psychological barriers at 110, with the focus now on the next measured move objective all the way up in the 114 area, which is a measured move following an inverse head and shoulders break off that low that we had seen back in January of 2017 at 103.41. There is room for a corrective pullback, but any setbacks from here should ultimately be very well supported ahead of 107 in favor of a next higher low and continuation of gains. Only back below 105.70 would compromise the constructive outlook for euro dollar. Sterling dollar. So cable has been consolidating above some recent resistance at 127.75, with the break signaling a major bottom, and the market now focused on eventually trading up towards the next key measured move extension at 135. There is room for setbacks on a short-term basis, but now setbacks should be very well supported ahead of 125 in favor of a continuation of gains up towards that 135 next target area for sterling dollar. Only back below 23.60 would compromise the constructive outlook. Dollar yen. So dollar yen has been confined to a downtrend for the entire 2017, and this latest bounce that we've seen has come into some serious trend line resistance off that those highs that we saw back in earlier in 2017. That trend line resistance comes in the 113 area. So it'll be interesting to see how the market now responds to this area. If we see a close back below recent support, which comes in around 112, that will strengthen the bearish outlook and accelerate declines, confirming the possibility or strengthening the possibility for that next medium-term lower top. If, on the other hand, the market establishes a daily close back above 113, it will end this downside pressure and suggest the market could be poised for a more significant bottom off the recent 2017 low at 108.13. Euro Swiss. So Euro Swiss has seen an impressive recovery over the past several sessions, and this could mark the beginnings of a shift in the structure here to a more constructive bullish structure, but the market would need to establish above 109 for that to be confirmed, and until then there is risk for a topside failure and resumption of declines back down towards some meaningful lows ahead of 106. Aussie dollar. So Aussie has seen a shift here over the past several days, with the market breaking down below 75 and now opening the door for an acceleration towards next key medium-term support at 71.60. At this point, look for any rallies to be very well capped, with only a break back above 76.11 to compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has raced up to fresh 2017 highs just shy of 138, and the market has now finally seen a bit of a correction, which was well overdue considering the intense rally that we had seen in recent days. At this point, look for the setbacks to be very well supported by some previous resistance in the 135.30 area ahead of the next upside extension and continuation of gains towards a measured move in the 140 area. Ultimately, only back below 132 would really compromise the constructive outlook for dollar CAD. Kiwi dollar. So Kiwi rally should be very well capped, with the market showing signs of topping out over the past few months. The market now is focused on the establishment of below some key support around 68.62. The market had taken out that support to break to 2017 low, but wasn't really able to establish below until a break and close back below 68.62 on a weekly basis. We'll do a good job of accelerating declines towards next key medium-term support at 66.76. At this point, any rally should be very well capped ahead of 71. SPX 500. The S&P 500 is finally pushed up to its own fresh record high above the previous record high at 2,400, and now this opens the door following a period of consolidation of about 80 points between 2320 and 2,400 to that next major extension into the 2480 area further up. At this point, it would take at a minimum a break and close back below recent support at 2378 about to take the immediate pressure off the top side, but overall it would take a break below 2320 to force a structural shift. Until then, there's risk for continued upside and record highs towards that next key objective at 2480. Gold. So gold has seen some intense pullbacks over the past several sessions, but the market could now be looking for that next higher low above 1195 in continuation of what we've seen since 2016 as a period of higher lows and higher highs and a more constructive outlook. So look for a higher low now to carve out somewhere above 1195, ideally ahead of 1210, in favor of that next major upside extension and continuation of this series of higher lows and higher highs towards the next measured move extension at 1335, just shy of the 2016 high at 1375. Ultimately, only back below 1195 would compromise this constructive outlook for gold.